Have you ever wondered how investors make those extraordinary returns you hear about? The ones where they invest in a company before anyone's heard of it, and a few years later it's listed on the stock exchange, multiplying their money many times over. Well, today we're going to talk about the exact opportunity, but with a twist. What if you could invest in companies that are already successful, already profitable, and just 2 to 3 years away from going public? Before we dive into it, let's set the stage where India stands today. Hi everyone and welcome to Centrishala. My name is Anjali and today we'll be talking about InCred Growth Partners Fund 2. India has emerged as the world's third largest startup ecosystem, home to over 1 lakh startups and more than 100 unicorns. But here what's interesting, after the funding winter of 2022 to 23, only the strongest companies survived. These battle-tested champions are now preparing for IPOs and there's a small window to invest in them at attractive valuations. That's exactly what we're exploring today with the InCred Growth Partners Fund 2. The fund strategy. InCred follows Super 8 strategy, investing in just 8 carefully selected companies. Let me break down Super. S stands for scaled. Scaled companies with revenues exceeding 500 crores. These aren't startups figuring out, these are established businesses. U stands for unique. These are companies with strong competitive moats, something that makes them hard to replicate. P stands for profitable. Here, the company must be EBITDA positive, meaning they're generating real cash flow and aren't burning money to grow. E stands for exitable. This is crucial. The company must be IPO ready within 2 to 4 years. This isn't a decade-long wait. Liquidity is on the horizon. R stands for relative bargain. They invest at attractive valuations, often getting a discount compared to the market. Think of it in this way. InCred is investing in companies that have already climbed Mount Everest base camp. They're not at the bottom struggling with altitude. They're at the camp and ready for the final push to the summit. Now let's understand how the fund makes money. So how exactly does this fund generate returns? The target, a gross IRR of 30 to 35%. To put that in perspective, if you invest 1 crore today and the fund achieves its target IRR of 30% in just 4 years, your investment could grow to approximately 2.86 crores, nearly tripling your money. They invest 50% in established funds like consumer, financial services, and enterprise. These are 2 to 3 years from IPO. The other 50% goes into emerging themes like data and AI, manufacturing, and sustainable energy with higher growth 4 to 5 years from IPO. This balance gives you near-term liquidity and explosive growth potential. But these aren't just targets pulled out of thin air. Let me tell you the actual track record. Fund 1 performance. InCred Growth Partner Fund 1, their first fund, is currently tracking a healthy 30% of IRR. These funds are led by Vivek Singla, who brings over 20 years of investing experience, IIT IIM credentials. Let me share a few impressive examples from their portfolio. They invested in Niva Bhupa before it went public, and when the company listed in November 2024, the investment had already delivered 1.5x return, a 50% gain in over 2 years. Then there's Manjushri Technopack, India's largest rigid plastic packaging company, which has already filed for its IPO and is set to list soon. Shadowfax, the country's leading last-mile logistics network with over 40% of market share in quick commerce, is also gearing up for its IPO in 2025. And finally, Sellable Technologies, a fast-growing data, cloud and AI services company, has seen remarkable 4x growth in just 4 years. 5 out of 7 Fund 1 companies are providing near-term liquidity, and 70% were directly sourced through their proprietary network, not through brokers. These aren't small startups. We are talking about companies doing 2,000 to 7,000 crores in annual revenues. Now let's talk about what Fund 2 is looking at. They have already signed their first deal with ILGI Electronics, a division of the listed Amber Enterprises. ILGI manufacture electronic components for companies like LG, Samsung, Bajaj, TVS, Hyundai, and Maruti Suzuki. Now let me highlight some unique features of Fund 2. First, shorter duration. Just 6 years from the initial close and around 4 to 4.5 years of effective lock-in, not the typical 10-year funds. Second, no IPO lock-in. As a Category 2 AIF, when portfolio companies go public, the fund can participate in the anchor book and potentially exit faster. And third, sponsor commitment. 20 crores of the manager's own money is invested alongside you. So how do you know that this fund is a perfect fit for your investment portfolio? Think of InCred Growth Partners Fund 2 as a growth accelerator in your portfolio. You're looking to diversify beyond listed markets in just 1 crore minimum, with the capital being called over 2 to 2.5 years. So you're not writing a 1 crore check on day one, it's deployed gradually as opportunities are identified. Second, you want exposure to India's growth story but don't have the access to pre-IPO opportunities. Now let me wrap this up for you. India is at the inflection point. We are witnessing the rise of world-class companies across sectors, from logistics to health insurance, from AI to manufacturing, and from beauty to dairy. India's best companies are preparing to go public. This is your chance to get in before they do. The InCred Growth Partner Fund 2 offers you an opportunity where you're not betting on unproven startups. You're investing alongside a seasoned manager in market-leading, profitable companies that are 2 to 4 years away from IPO. Well, this was all about the InCred Growth Partners Fund 2. We hope you liked this video. Please do like, share and subscribe.